What is going on, everybody? My name is Hayden. I'm here with Matt. And today, or this week, we are going to be talking about so far the biggest concept we've learned in real estate or investing in real estate. So, Matt, I wanted to ask you, what is really the biggest thing that you've learned so far in investing in real estate? Your journey started essentially a year and a half, 2 years ago. What's the biggest overall concept that you've learned in real estate, whether that's multifamily, single family, whatever that is?
So to start my real estate investing journey, I started with investing in two short-term rentals out in the Palm Springs area. We bought them, renovated them, and refinanced. Um, and then when you and I started working together, we started looking into investing into multifamily real estate. The biggest concept that I've learned when valuing multifamily real estate is it's valued based on the income of the property, not necessarily like single family homes where it's based on comps in the area, all the amenities it has, etc. Multifamily itself is solely valued upon the income it could bring into investors' pockets. And that's basically how the bank looks at it. They're going to look at how much revenue is this property able to generate, how much they can lend on, and from there, that's how you can value a property. It is called a cap rate. Basically, you take your net operating
Yeah,
income.
it's much more logical that way.
It seems it it at least looking at it from an investment standpoint, it's much more logical.
Yeah, well, because I mean, in a single family home, it's just pie in the sky. Hey, I bought this house in 2020 at 250,000, and now it's worth $783,000 because Zillow told me it was. It just doesn't. Those numbers just never compute in my head. You talk to real estate agents, and they know everything about everything, and they're like, well, with inflation and with this and this and that, and they have all their terms that make it sound super exciting, but realistically, it's supply and demand. It's a property is worth what somebody's willing to pay for it, whereas um, whereas multifamily, it's much more logical in the sense of it's your the value of the property is based on what you do to get more money in your pocket. What you do
Exactly.
to push revenue. So I like it that way because I can actually make sense of it in my head. But yeah, keep going. Sorry.
And it's a simple calculation.
Mm-hmm.
You want to be buying properties at a higher cap rate, selling them at a lower cap rate. And that's how you can really make money in the long term of investing in multifamily. So if you're
How
able
do
to,
you know? How do you know what cap rate? How do you know what cap rate to sell it at, or that you're gonna sell it at?
it depends on the market a little bit and like the areas you're investing in, the cities themselves, and what like for example, Phoenix, you're going to be buying properties typically at more of a premium, um, with rents being higher in the market. Medium income is a bit higher, whereas Tucson, you're able to buy these properties little not discounted rates, but at a cheaper investment. Um, Still great returns. You're just looking at more of a smaller market rather than like a Phoenix, for example. And to push to increase the value of the property, there's pretty simple steps of doing that. It's one of the easiest ones is increasing rent. If you're buying a property that has low rents and you can increase them, that's an easy way to add value to the property. Obviously, renovations help because that then you can get a higher rent. Um, and poor management. If your expenses are really high on the property, obviously your net operating income is decreased because you have so many expenses. So if you're able to lower those and be really efficient um, with your expenses, have a good property manager on site or on your team that can fill units quickly, push rents to the limit, and you can increase values pretty easily that way.
Yeah, that's a big one. One that I didn't know was as big as it is management. Uh,
Yeah,
you assume that somebody takes on the role of a property manager, that they know what they're doing, that they're going to be able to push rents as high as or as far as they can go. But that's not always the case, and rarely is it the case, really, that we're finding. And I think it's super interesting because you look into a property and you're like, well, I'm seeing rents this at this property that's down the street at say 1,500, but rents at the property we're looking at are 1,100. So first of all, is it in a worse area? So you have to know, if you know the area, it's great, because then you know that, okay, it might not be that uh, it's a less desirable area. It might just be that the management is poor, or if it's a good area that you want to be in, um, it might be something to look deeper into. It's not always Things are not always what they seem, because
right.
you can always chalk it up to, oh, lesser rents, probably worse neighborhood, probably worse product, or the home is not as nice, or whatever. But that's not always the case, and we're finding that to be so true.
Yeah, absolutely. So, what is your biggest concept that you've learned with real estate investing? Kind of walk us through where you started as well.
Yeah, so I started in property management. My uh, I started working for a property management company. I worked as a maintenance technician, and then I worked my way up to leasing professional, was what they called it, and then all the way up to a property manager. Took probably about 5 years doing that. Felt like 50, but about 5 years doing that. So my background is in property management, and then I bought my first rental back in 2021, and have been going ever since. And then we hooked up in 20 or beginning of 2023. Started getting a little more serious about multifamily here at the end of 2023, and now ramping that up. Um, so, with that said, the biggest hurdle or biggest concept that I've had to overcome, or not overcome, but I've had to learn, and the uh, big lesson that I've learned, is that putting your money in the bank is worthless, right? Just putting your money. I mean, we've always been taught, and generations before us have always been taught to put your money into a bank, keep it in there, and save it for a rainy day or save it for retirement. Well, that's coming becoming untrue and becoming kind of debunked, because it's not conducive anymore. Back in the day, you left your money in the bank, you could get a little bit higher of an interest rate for doing so. Nowadays, you're getting less than 1% keeping your money in the bank. So your dollar is giving you less than a cent of return by putting it in the bank. Whereas, and I know everybody says the word inflation, but inflation puts, if you the great example is insurance. You year over year, you're seeing a 10% increase in insurance. Your expenses go up by 4, 5, 6, 7% every year, especially the last 3, 4, 5 years. So you are essentially losing money by putting money in the bank. And it's good for the bank, but it's not necessarily good for you. So having to understand that, and understanding that, and really putting that concept to work, and putting that into real estate, I'm noticing you put say you have $100,000 or $50,000 in your bank, you put that towards a property, whether you invested in your own property or you invested in somebody else's deal, and that gives you money, puts money in your bank account each month, and gives you and buys you some income, is much better than putting it into a bank and just having it sit there, right?
For
What
about
else? Or like, what are you
point
going to do with
zero
your?
zero zero one interest.
Yeah, exactly. And there's two sayings that are the opposite, and people either believe one or believe the other. That's cash is king and cash is trash. I believe both to be true. Cash is king when you're going out and looking for properties. You don't want to sit there and sit on 500, $600,000 and keep it in the bank. So go invest in property. So cash is king at that point, and then cash is trash by just if you just leave it and do nothing with it, because it's not going to do anything for you. You
Right.
have to put it to work,
Exactly.
you know. So those are the main concepts that I've started to learn or started to really understand and really get, because you can hear something but not necessarily understand it. So that's kind of what um, that's what I've been learning.
Yeah,
But
and not to mention all
yeah,
the tax benefits with real estate investing rather than just letting your money sit in a savings account. I think that's also one of the biggest advantages with investing in real estate. The tax savings. You're able to use some of the depreciation against your W 2 income or whatever type of income you have to offset that.
yeah, yeah, absolutely. It's definitely that real estate's just the vehicle that Matt and I like, that we are super interested in, and we have the time, energy, and effort and knowledge to move forward with. I mean, you can invest it in, or invest your money in commodities, whether that's gold, silver, Bitcoin, things like that, or you can invest it, or there's some finite amount of it, or you can invest it into stocks. We like real estate because of all the benefits that it has, tax benefits. You can write off. You can write off towards your W-2 income, your 1099 income. So we find that to be such a massive benefit. And then you can also there's a ton of different benefits that we can talk about for hours, and we probably will at some point. But that's just the vehicle that we chose and we like.
Yeah, absolutely. And another really
Yeah,
cool way to invest in real estate is being able to use your 401k. Um, I didn't realize that before starting this that you could use that money without being penalized to invest into real estate. Um, I feel
yeah,
like what I've known previously is if you pull that money out early, you get penalized. But with investing in real estate, it's not that way.
yeah, yeah. Your IRA as well is the same thing. Um, I, we won't get into the intricacies of it because we're not accountants or or lawyers, but we definitely those are different vehicles that you can, if you say you put money into your IRA or 401k monthly or annually, you can take some of that out and invest it into real estate as well. So it's a little bit more liquid than you think. So,
Yeah,
but yeah, it's definitely an interesting concept, an interesting thing to think about as you're trying to figure out, because a lot of people think that they need 200, 300, $400,000 to invest in a deal, when trusts, basically, people clump money together to go put it into to big investment assets, or big real estate assets, and then you can get you, or monthly and annual income.
absolutely.
Yeah, but yeah, those are the main things uh, that I learned, or the main things that the biggest things that I've learned, and I think it's crucial to understand if you are going to invest. You know why you invest, because if you're just walking through life, or you're not walking through life, if you're just walking through and trying to figure out um, what you should do with your money, if you should keep it, save it, hold it on to it with, cling on to it for dear life, or put it to work. Those are the decisions you have to make.
Absolutely.
Perfect, man. Well, it was another amazing conversation with you. So vitalized and full of
Love
life.
that.
But yeah, we'll see you next
Sounds
week.
good. Like and subscribe.